Inflation is still hot, the Fed still hasn't cut rates, and the market is starting to see a pullback. Tune in for your daily update on stocks, crypto, real estate, whatever it be. Stay tuned so you can get your daily update on how the market is doing. This is your host, Jaden Vrains, founder of Vrains Capital. This is Pulse on the Market. Let's get right into it for today. So once again, the indexes are all down, and we're seeing a slight pullback in the market. This was expected. We've had a euphoric run in the market, and it is starting to slow down here a little bit. And the big question is, have we already reached the peak? Because two things can go down. I mean, we can see another break in the market, slight pullback, and then a push through, another break. Or we can see it start to decline. Investors start to get worried. They don't want to lose their gains over the year, and they start selling. And it create like a catastrophic snowball effect that leads into a slight recession. It doesn't help that the interest rates are just, the Fed is yet to cut rates, and inflation has still not been contained. Yes, the expected PPI report only increased by 0.3%, which is 0.1% more than expected. So a tenth of 1% worse, and it caused a huge pullback in the market. And we got the Dow down 0.8%, the Nasdaq is down 1.18%, and the S&P is down 1%. With the small caps up a little bit, and the 10-year once again is up. It's up to 4.3, so that is not good. That means the price of bonds are dropping dramatically. It's dropping quite a bit due to the high inflation that has yet to be controlled. And so this overall hasn't been the best week for the market. We've had the last, 14 out of the last 16 weeks have been phenomenal, have been green, positive, and huge hikes. And now we're starting to see a little profit taking and a little fear from potential interest rate, or from the potential of not cutting interest rates and not controlling inflation. Let's get into the news stories for today. So the two companies that I was explaining yesterday, Adobe and Ulta Beauty. So I wrote it down over here, but I predicted that Ulta Beauty, they're going to come out with a solid earnings report, and then the guidance would follow, and it'd cause the stock to drop. I have this written down, and it's exactly what happened. So Ulta Beauty, they performed well. Their revenue was $3.5 billion, which is up 10% year over year. They beat that by $24 million, and they beat their EPS by 55 cents a share. So their EPS was $8.08, and that's up 21% year over year. So after hearing this, the stock shoots up, but then guidance comes in. And we knew this was coming due to inflation and other reasons, that sales were going to decrease, at least slow down. Not decrease, but definitely not as hot as we were expecting for the future earnings reports, future quarters for Ulta Beauty. And so it caused the stock to drop quite a bit. It's down around 5% now, 4.5%, down to $5.40. So it's dropped around $25 a share. And the next one is Adobe. This is slightly fearful for just the AI industry in general. They said that Adobe, they beat their earnings reports as well. Their revenue was $5 billion, up 11% year over year. They beat that by $42 million, and their EPS was $4.48 a share, which is 17% year over year. They beat that by 10 cents. So they beat their estimates, but the guidance, they said that they were fearful as well for their just emerging competition, that it's very, very saturated right now. Everyone's trying to get a piece of this pie, and this scared investors, and the stock just immediately tanked. It dropped quite a bit. It is down to, $488 a share. It's down $81. That's over 14%. So it's the biggest loser in both the S&P and the Nasdaq. They're in both. And so that stock is just getting clobbered. Let's see here. All right. So for other news stories of the day, there has been a new drug approval. This is big news. I'm very bullish on the pharmaceuticals, on just the technology advancing. We have drugs like Mounjaro, Wegovy, these weight loss drugs, and also the FDA has approved Madrigal Pharmaceuticals. That's MDGL is their ticker, and the drug is Rezdiffra, and it is the first treatment for NASH liver disease. This is awesome, and this is great news. So this marks a major advancement in addressing this common and serious health issue. And this caused Madrigal's shares to soar over 20%. So whenever there's good drug news for a pharmaceutical company like Madrigal or Eli Lilly, Novo Nordisk, whatever it be, it causes these stocks to skyrocket. Same thing if you look at if there's any sort of bad news, delays in test results or bad test results, the stock plummets. And so it is very, very sensitive on the fundamental side. if any news comes out, it swings in either direction. So very high risk, but also high reward if it's in your favor. All right, let's see here. So Tesla it's the worst performer in the S&P 500. You probably could have guessed that. And it has been getting clobbered. I mean, we saw what happened to Fisker, that it's filing for bankruptcy, and it dropped 50% in value just in one day. And now Tesla has been dropping quite a bit. The EV market is very, very competitive, very rough right now, especially with the advancements in China and whatnot. The demand is getting lower and lower, and it's just not what it once was. We had a bunch of people entering in the space, and timing is very important. I'm sure if Rivian was started at a different time, that they would be a lot more successful or whatnot, but it's just not in the brightest moment for EV vehicles or electric vehicles. And so timing really is important for companies, and companies like Fisker aren't going to be able to survive. And Tesla is down 32% year to date, so they've been getting clobbered as well. All right, big news for SpaceX. So they had their third test flight. The first two were failures, but this one was a success. So they reached space before breaking up over the Indian Ocean, and this basically marks a significant milestone for the company and for the advancement in this technology. So go Elon Musk. This is awesome news. I like SpaceX a lot. All right, let's see here. Dick's Sporting Goods. This one surprised me quite a bit because the retail industry has not been performing very well. So Dick's Sporting Goods, their ticker is DKS. Their shares surged 15% following a holiday earnings beat. And they said they're going to increase their dividend by 10% as well. So this is their largest sales quarter in history, and they expect to continue their growth in 2024. So for other companies, it's been very, very tough. But Dick's seems to be pulling it off. They seem to be increasing their revenue, EPS. And let's actually take a look at what they reported. So I had it up here. I can pull it up real quick. This is important stuff. So their stock ticker once again is DKS, and they are currently down, but I mean their earnings report was super solid. But today the entire market's been down, so it hasn't been the best for anyone. So they beat their revenue by 14% and their EPS by almost 3%, so 2.28%. So they had a solid earnings report, and we saw that reflect in the stock price. So before the earnings report, it was trading at around 188, and it shot all the way up to their all-time high was 222. Not sure if that's the all-time high, but just for the day or for recently. And I mean now the stock's at 210 just due to the pullback in the entire market. So it's not just them. I mean we got every stock seems to be down. Other than crypto related stocks, we got Riot that is up 3.4%. We got Marathon, which is ticker MARA, is up 4%. Let's take a look over at Coinbase. Coinbase has been having a whale of a year. They are up 1.5%. So they are up 36% year to date. And this has been due to just the influx of cryptocurrency, the hype around that. With Bitcoin increasing, so does Coinbase, because they are the custodial for 10 of the 14 major, correct me if I'm wrong, but 10 of the 14 major spot ETFs for Bitcoin. And so they charge commission for that as well. And it is good for the revenue. And in their last quarter, they were positive, so they reported 1.04. Their estimate was only 0.02, so they beat that by 4,600%. It's impressive. And over the last year, they're up 266%. So Coinbase has been a solid investment. And over the last week, it has been down a little bit due to the pullback in Bitcoin, because currently, let's take a look over at Bitcoin. They are down on the day. This is the world of crypto. It'll go up 10% one day, crash 5-6% the next day. It's down to 68,000. So we hit all-time highs of 73,800, almost 74,000, and now it's pulling back like it usually does, all the way down to 68,000. And we'll see if it breaks through once again and hits a new all-time high, or if it continues to pull back. Because I know that there was a lot of crypto Bitcoin whales, like people that hold a lot of Bitcoin that are big investors, that they liquidated around 500 million of Bitcoin. And there's a lot of people think that Bitcoin isn't anti-inflation, that it's a hedge for inflation, but that is not true. I believe that they are completely independent, and it has nothing to do with inflation. I believe it has more to do with just the overall hype in cryptocurrency, and with the hype coming in from the halving event that's supposed to happen in April. that will happen in April. And so there's just been a lot of craze over it. Hopefully it doesn't turn into a buy the rumor, sell the news type when people realize, oh, that didn't affect it as much as I thought it would, and then ends up having a major pullback. But I think once the demand picks up and for the reduced supply for mining it, I think it'll take off again and hit around the 100K. I mean, that's personal opinion, 100%. Bitcoin is very risky. Crypto's risky. In many ways, it's more gambling because of how high their volatility is. All right, let's get back to the news stories. All right, let's see here. Anything else? So Under Armour has been doing terrible. So while Dick's is performing quite swell, Under Armour took a hit. So their shares dropped 12% following the news that founder Kevin Plank is walking the plank. He is not walking the plank. Their current one walked the plank, and Kevin Plank is now returning as CEO. Sorry, got my data mixed up. And so, I mean, whenever there's a change up in leadership, I mean, the stocks are going to drop. The company usually doesn't perform as well at the start, but then after a year or so, it starts to pick up. All right, let's see here. So it's been tough for McDonald's. There's been McDonald's outages, so they experienced widespread tech disruptions. So this forced closures around the world, including in Australia and the UK. I haven't heard much about that in the US, but apparently around the world, McDonald's outages are occurring. This is not good news. If you want your Big Mac and your chicken McGriddle, that's bad news for you. Let's see. Man, Amazon. So Jeff Bezos, as you guys saw, passed up Elon Musk, and it seems to be like he's looking in the rearview mirror and he's just leaving Elon in the dust right now. Amazon continues to do well, and Tesla continues to drop. So Amazon actually just came out with a new AI tool. So everyone's hopping on the AI train, obviously. Why wouldn't they? It's going to make the workspace even better. Amazon has rolled out a generative AI feature allowing sellers to quickly generate product pages from external links. This enhances efficiency and listing speed. I like the sound of that, man. So you're going to be able to just type in a few words and it creates an entire page for you. This is going to increase efficiency so much. This boost in AI. One man is going to be able to do the work of 5 different men. And I truly believe that. Just efficiency, I think this is a huge step for mankind. Amazon Sale for All. So Amazon is set to host its first big spring sale from March 20th to March 25th. Open to all shoppers, not just Prime members. So they're going to do a whole big spring sale. I'm looking forward to that. I will be checking out Amazon during that time. So it's March 20th to 25th. So Dollar General, as you guys saw, I wonder how they're doing today, because I know they took a hit because of inflation. It's been very difficult for these Dollar Trees, Dollar Generals to remain profitable. And they're up a little bit today at 151. Let's check over the last little bit. So, yeah, they were hitting all-time highs of around highs of 167, but now it's down to, it dropped all the way down to 148. It's been pretty volatile. Their earnings report was solid. 5% surprise on the revenue or earnings and 0.93% on the revenue. But the guidance, they're projecting to decrease sales, and inflation has not been their best friend at this moment. But they are reducing their self-checkout across stores to combat theft. People are just swiping, quote, they're just swiping their things and taking them. So it's very easy to steal through the self-checkout. Yes, it's more efficient. You don't need as many employees. That saves money, but who knows? They might be losing more money just off people just walking out of the store. They swipe a few things, put it in the bag, and then leave with 10. So it's very easy to steal from these stores. And so they're adjusting their strategies in 9,000 different stores, and they're limiting self-checkout in 4,500 others to 5 or fewer items. So this is to prevent theft of multiple items. All right, so the Russian election is going on. Who do you think is going to win? Putin, of course. So his reign will extend. There's no chance he gets voted out. And TikTok, speaking of just that side of the world, so TikTok, as you guys saw, is getting banned unless they sell it within 6 months. So Chinese officials have criticized U.S. actions targeting TikTok. And they have indicated to ByteDance, that's the app's owner, that they would prefer the app to be banned rather than sold. There's a little Cold War going on right now between the U.S. and America. Or, what am I saying? The U.S. and China. And it's not with military, but with this kind of stuff, with tariffs, with trade, with TikTok, even the smallest things. I mean, TikTok's pretty big though. So they would rather than just ban it in the U.S. than sell it to people in the U.S. So there is a Cold War going on here, and there's a little bit of beef, and we don't know all the details. The government definitely knows a lot more, but we are not on the best terms right now with China. All right, so that will be it for today. If you guys have any questions or comments, or if you want to have me dive into a stock specifically, you just let me know, all right? You reach out to me on marketpulse.io, and I will include your stock in the next show. And that'll be it for today. Let me pull up my little, my little disclaimer that you guys love so dearly. I should have it memorized by now just because of how many times I've done it. But this podcast is for informational purposes only. It does not constitute financial, investment, or legal advice. So this is all personal opinions and experiences, and your advice to conduct your own research. Seek the advice of qualified professionals before making any investment decisions. Not guaranteeing the accuracy or completeness of any of the information I shared today. It's all risky. Past performance is not negative future results, and I'm not responsible for any loss or damage that may occur as a result of investments made after listening to this podcast. Once again, guys, love you. Have a phenomenal weekend, and I will see you guys on Monday.